If you are looking at borrowing money either to buy a car, maybe to buy a house, the first thing that a bank or a lender is going to be looking at is your credit score. In one of my previous videos, we've talked about what makes up the credit score and how it's calculated, but we didn't really give you any kind of tips or advice on how to maintain a good credit score and how to build a credit score from the bottom up. So let's talk about that today. The first thing let's talk about is building a credit score. So if you are 18 years old, or maybe you're in your 20s and you haven't really established any kind of credit, maybe you're scared of credit cards, which is a good thing. You want to have a little bit of reservation against credit cards. But in order to borrow money, you do need to have some kind of credit score. And there's a lot of stuff floating out there right now about a no score loan for a home, but it's very difficult to get. And there are only a handful of lenders out there who are really willing to go through what's called manual underwriting. And that's probably a different video. Today, let's talk about what it would look like to just focus on your credit score. First of all, you need to start building it. One of the things we talked about in the last video is that in order to have a good credit score, you need to make on-time payments. You can't make on-time payments on something that you don't have. So you can go to a bank or a credit union and get a secured loan or a secured credit card. And these have very minimal balances, minimal limits for you to start getting into the world of borrowing money and paying it back. This is a really good, simple, lower risk way of starting to build your credit. As you get into that a little bit more and you are paying those things off over time, you're going to, the bank or the credit union or whatever is going to see, hey, this guy or gal is going to be able to handle a little bit more money. Maybe they will increase your limit. Maybe they will offer you a different kind of personal loan, or maybe extend credit so you can go buy a car. Those are good things, but you still want to be very cautious with them. Another thing we've talked about is that the length of time that you've had credit is a fairly big factor when it comes to your credit score. However, you can't control you turning 18. One of the common memes right now going around is, man, I wish I was buying houses in 2008 instead of being in first grade. The reality is you can't do that. However, if you are a child or maybe you're a parent with young kids, you can actually add them on as an authorized user to your card, and that helps to give them a very long length of credit because they're obviously not using it, but it looks to the creditors like they've been allowed to use it. Now, I wouldn't do that if you have a history of not being smart with your credit cards, or maybe you open one up specifically for them and you use it very sparingly and pay it off right away. Putting someone on as an authorized user, or maybe you're being added as an authorized user, is a helpful tool, but it can be very quickly abused and have the negative effects of late payments, of maxing out the credit cards. It can cause some serious problems. So you want to be careful, but that is a decent tip on getting around the length of credit that you need. So those are things to start building credit. Get small secured loans or credit cards. Make sure that you're paying them off every single month. Don't go too long without paying them off. And over time, you're going to build some credit that will allow you to get more things. So we talked about diversifying your credit, loans, credit card, different types of loans as well. So those are just some things about building. But what about maintaining? Maintaining the credit score is probably the hardest thing because you have to stay on top of your credit. We've looked at how to find your credit report so you can find any kind of discrepancies. But the biggest, most important thing that I can say is pay your bill on time. I've already said it a handful of times here, but you need to make sure that you're paying that bill on time, because if you don't pay that bill on time, your credit score is going to tank. The other thing that you don't want to do is open up a bunch of accounts all at once. Maybe spread it out. Credit inquiries and new accounts do ding your credit. They come back after a few years, but if you're talking about maintaining credit after you have done the work of building up a decent credit score, you don't want to keep applying for things just because you have a good credit score. It's not about, okay, now I have all the availability of buying all of these things on credit. That's great, but don't abuse it, right? So your credit score is something to strive to maintain a high credit score, because you're going to get more favorable terms on a loan or maybe a credit card. You'll get higher limits, as you use your credit cards correctly, and using less of your credit limit looks better on the credit reports. Those are some really good tips. Now, there's a ton of other things out there. There's a lot of other people who are giving advice on how to build and maintain credit. Those are just some really quick ones for you as you look to start your home buying journey, because that is huge. The higher credit score is huge for buying a home. That's the first thing that lenders are going to be looking at. So that is highly important if you ever want to go out and buy a home. Thanks for watching. We'll talk some more about finance and home buying tips. If you or somebody you know is looking at kind of getting some more information, please like, comment, share on this video, and help others who are looking to buy homes and improve their credit.